Hi, this is Dave Aquino with Microquant, and this is the free video for Thursday, July 2nd, 2015. We're just looking at SPY today because today's kind of a strange day. It is the last trading day of the week because of the 4th of July observed holiday tomorrow on the 3rd. So basically what we got in the SPY and the S&P in general was a slight gap higher at the open, some positive resolution to the debit issues in Puerto Rico, and the fact that the Greek Prime Minister is agreeing to certain of the EU requests for the repurposing of their debt. So the markets responded positively. Now, I mentioned in the trading room that we probably wouldn't be able to hold these gains, that we would probably close slightly lower. Now, what we've actually experienced is a greater drawdown than expected. So right here, roughly about 10 o'clock, we made the high of the day, and then we subsequently fell until we closed the gap right here at 10:30. Started to get a retracement move, but we basically failed and then broke the low of the day again. And since that point, roughly about 11 o'clock, we've fallen almost the equivalent distance, starting to put in a double bottom right here. Now, from the swing low, from back on the 1st to the swing high here on the 2nd, we actually went through and have done a complete 76.4% retracement. I'm actually thinking we're going to bounce a little bit in the markets and probably end the day unchanged relative to where we closed yesterday. It's very typical on a day in which we're leading into an extended holiday. So the markets will be closed for 3 days, plus the fact that non-farm payrolls was relatively uneventful. It was a slightly negative from what was expected, and also you have the Greek referendum on Sunday as to whether or not the population actually is going to agree or disagree or voice their opinion on these EU constraints on their economy. So with those things in mind, we'll probably rebound again a little bit to the point where we're almost unchanged for the day. So right now, I'm looking at a quick 50% retracement, and that should be where that lays. Those of you that are interested in our credit spreads, you probably heard about them. We actually have a very strong running track record for our credit spread that we put them on every week. Just to give you as a quick heads up, as of right now, and we still have about 3 hours until the close, but just as an example, if we get maximum profit on all these positions, and you can see the current profit and loss levels in these credit spreads, if we close and these expire worthless, we get to keep 100% of the premium, and for the amount of premium divided by the amount of buying power required, which in this case is about $20,000, we are looking at a weekly return of 8.5% on the money we commit to these trades. It's very consistent. This will be the 6th straight week of 100% profits in these trades. Now, every once in a while, we may run into a position where we take a small loss, but we actually control the losses to a very, very great extent, to the point where we're almost too conservative. But there's nothing wrong for me to be too conservative. If we get on a track record 85-90% winners, max winners in this strategy, I consider these strategies a success. We've been running these trades for well over a year and a half. 2015 has been stellar in terms of the returns we've gotten on the positions. If you are interested in them, I would actually advise you to take a look at these two workshops, the 11-hour option strategy workshop. Here is the web address, valuechartstrading.com/11, and then the weekly power option strategies. This is our extended 3-hour credit spread workshop that discusses our weekly power option strategies. They're very similar but slightly different, but each workshop outlines the criteria in which we put on these credit spreads, and normally we aim for 4-5% return, but we've been consistently pushing 7-8-9% in these credit spread strategies, and even last week it was even better. These are our credit spreads from last week, 11.6%. Now, you'll find that we are in the market with our credit spreads roughly half to 1/3 of the total market time every week, but we walk away with a much greater than market expected return in the types of trades that we do. Again, we do these trades every week, so we have a potential of earning good, high quality, high probability returns every single week. And we can do it 52 times a year. So you can just imagine the level of compounding we get in our trades. So take advantage of that. We look forward to seeing you in the trading room. And good luck trading into next week.